No one expected this move, and honestly, even the most seasoned analysts were left stunned as the latest developments around Iraq's currency operations exposed a level of urgency that nobody saw coming. So before we dive into the depth of this unfolding situation, make sure you stay with me and hit that like button right now so you never miss any real updates, because what I'm about to share isn't something you're going to hear on the usual mainstream channels. This is where facts meet clarity. And today, we are looking at a series of decisions that have reshaped the conversation around the Iraqi dinar, the black market pressure, and the unexpected steps taken to stabilize the financial environment in 2025. And the story begins with something that caught both locals and international observers off guard: the intensity of the recent crackdown on the black market exchange dealers, a move that signals Iraq's seriousness in regaining control over its fluctuating currency landscape. And although many predicted slight regulatory tightening, no one anticipated such bold enforcement actions that put hundreds of unauthorized street exchangers under direct scrutiny, reminding everyone that the central bank is done watching from the sidelines while the informal market wreaks havoc on official monetary reforms. And while this might seem like a normal government reaction, the speed and precision of this crackdown created a ripple effect across Baghdad, Basra-Najaf, and other major cities where black market dealers once operated freely, and citizens were shocked to see overnight shifts in availability, pricing, and the overall sentiment surrounding USD/IQD transactions. And this is where the plot thickens, because the black market rate has been one of the biggest obstacles against currency stabilization, keeping pressure on the official rate and diminishing the government's credibility whenever reforms are introduced. But the recent enforcement wave signaled something deeper: that Iraq is preparing for a long-term structural shift, not just temporary fixes, and this has triggered speculation across investment communities, especially among those monitoring the dinar's potential revaluation trajectory. Even though no official RV announcement exists, observers can't ignore that a country typically strengthens its currency framework before any serious upward adjustment, and when we take a closer look at the timing of these actions, it becomes clear that this move wasn't random. It aligns with broader fiscal planning, growing foreign reserves, and renewed oil revenue streams, which collectively give Iraq more stamina to enforce monetary discipline. And all of this happened while the US dollar demand in the region continued to play tug-of-war with local liquidity, forcing policymakers to counterbalance speculation with firm oversight. And when unexpected government moves collide with global investor attention, you get an environment full of curiosity, tension, and new expectations. Exactly what we're seeing right now as discussions intensify around where Iraq may be heading with this situation roadmap in 2025. The big question circulating among analysts, because we have a lot more to break down, is whether this sudden shift in enforcement is simply a reactive attempt to calm temporary volatility, or whether it reflects a long-term strategy engineered to push Iraq toward broader currency stabilization. And to understand this, we need to dig deeper into how the black market behavior has historically undermined official monetary policy, because for years the unofficial rate has influenced public sentiment far more than government announcements, creating two parallel economies, one legal but slow, and the other illegal but fast, which led many Iraqis to rely on street dealers who could provide quick conversions despite operating outside regulatory boundaries. And this dual-rate structure created constant confusion, pricing inconsistencies, and inflation pressures that fed into everyday life, making it harder for Iraq to move toward a stable, internationally trusted financial system. And what no one expected this year was the aggressive pace at which authorities dismantled these networks, forcing people to rethink how they engage with the currency and potentially resetting the psychological foundation that shapes national financial behavior. And alongside this, the central bank has quietly introduced upgraded compliance checks, digital transaction verification methods, and improved coordination with international financial institutions to reduce illicit USD flows, all of which indicate a clear shift toward modernization and transparency. And when you connect these moves to Iraq's increasing attention to digital banking, international settlements, and enhanced forex supervision, it becomes obvious that the country is seeking not only stability but credibility on the global stage. something that has long been a challenge due to political upheavals, regional tensions, and systemic corruption issues. But what's different today is that Iraq appears to be coupling enforcement with strategic economic recalibration, an approach rarely executed with consistency in previous years. And this has prompted global currency watchers to analyze whether such stability efforts could eventually pave the way for a stronger dinar trajectory, even if not in the form of an overnight revaluation, because currency strength is not just about announcements, it's about restoration of trust, liquidity control, and long-term structural reinforcement. And as oil revenues remain steady and Iraq continues rebuilding internal systems, the idea of a more balanced and globally engaged currency policy does not seem far-fetched, especially when regional trade agreements and IMF-supported regulatory frameworks are being updated at the same time, and this convergence of factors has made 2025 one of the most intriguing years for dinar observers because every shift, whether regulatory, political, or economic, feeds into a bigger picture, one that shapes how Iraq positions itself financially moving forward, and this is where investors, analysts, and Iraqi citizens must pay close attention because the consolidation of control over currency flow is one of the key indicators of a nation preparing to strengthen its economic sovereignty, and Iraq's recent actions are signaling that something significant is now underway. That we understand the layers behind these actions, the next major angle to explore is how these changes influence long-term stability and what it means for both domestic markets and international observers, because when a government clamps down on parallel markets with such speed and intensity, the immediate outcome isn't just the removal of illegal traders, it also reshapes public trust and realigns economic expectations, and trust is the backbone of any currency's value, meaning that the more consistent and predictable Iraq becomes with its monetary strategy, the higher the chances that long-term stabilization will materialize. And this is especially crucial now as the global financial environment becomes increasingly sensitive to emerging market currency shifts, geopolitical tensions, and fluctuating oil benchmarks, all of which impact Iraq's economic health. So, when you combine the crackdown on the black market with rising digital oversight and deeper coordination with foreign banking networks, you start to see Iraq crafting the early foundation of a unified, transparent exchange ecosystem that could reduce speculation, close loopholes, and give policymakers clearer control over market behavior, which is a critical step toward any future currency strengthening. And while there is still no confirmed RV or timeline of any kind, the structural groundwork being laid today could play a significant role in shaping Iraq's next financial chapter because a successful stabilization campaign requires not only enforcement, but education, public confidence, predictable policy direction, and consistent regulatory follow-through, areas where Iraq has historically struggled, but is now making measurable progress. And as the country pushes toward aligning itself more effectively with global banking standards, clearing old bottlenecks, and preparing for broader economic reforms, international investors are watching closely to interpret what these signals might mean for long-term financial potential. And the truth is that no one expected Iraq to take such decisive action this year, but sometimes the biggest shifts happen quietly underneath the surface, waiting to emerge as turning points in history, and that's precisely why staying informed matters more than ever, because what we're witnessing right now may represent the beginning of Iraq's slow but steady transition into a more stable and economically confident nation, one capable of reducing dependence on foreign currencies while strengthening domestic purchasing power and positioning itself for future growth. And as all these pieces come together, you, the viewer, play an important role by staying informed, staying vigilant, and staying engaged as we continue tracking every major development that shapes this powerful story.